Mega cap stocks earnings week ahead. Will stock market continue rallying? Welcome to Late Night Stocks. In this video we will talk about what happened in the previous week because we had some important Q3 earnings, and then we will talk about what can we expect from the next week. We had also very important dates and stocks that we should look at. And in addition to that, I will also share an interesting stock with you. Please watch till the end of the video. We had some very important earnings last week. One of them was Netflix and other one was Tesla. In the beginning of the week, Netflix stock was $250. Now it is at $290. Can it go further? When we look at the stock price, since November last year, we are in this bearish trend, making lower lows and made the dip around $175. Now with this bullish sign, I think next target is to fill this gap around $330. So if the stock market rally continues, I would expect Netflix go to $330 to $350. But beyond that, I think beyond $315 and $400, we need to consolidate here to make an higher highs. So on Tuesday, we had the Netflix earnings, and on Wednesday, Tesla. When we look at the Q3 earnings of Tesla in detail, one of the most important points for Tesla is automotive gross margin. So we had seen this 32.9%, the peak levels in Q1 2022. Okay, in Q2, Shanghai was shut down. That's why we may have seen these lower levels. But in Q3, it opened again, but we didn't see any good improvements in this gross margin. And this can be a negative sign for Tesla. In the earnings call, they said that this is because the commodity prices are lagging for Tesla because they lock up some prices for like aluminum and steel before, so we see this decrease in commodity prices later. But they say that we can see the improvement in the margin in 2023, so not this year. Another important point was the expansion of Tesla mega factories. They didn't say it explicitly, but I think they postponed this timeline a little bit. I think this is because this huge cost in Berlin and Austin mega factories ramp ups. They want to keep this positive cash flow so that if recession worsens, then they need to have this buffer. But this is a bad sign for the stock. In Q2 earnings, Elon Musk said Tesla will grow 50% in average in the next years. If they cannot meet this 50% target, let's say they grow like 40%, that can cause a crash in the Tesla stock, but not at the moment. When we look at the stock price, after Q3 earnings, we made the dip around 205, now we are at 215. If stock market positivity continues with this NASDAQ and S&P 500, in the short term, I am expecting that Tesla can go to $250. With these okay Q3 earnings, the indices like S&P 500 and NASDAQ was strong in the last week. Can it be the sign for reversal? Let's have a look at the NASDAQ together to see if this trend can continue. After this disaster September inflation report, we had these higher highs. Since the beginning of the week, we were in this downtrend channel and it was looking bearish. But after some rumors from Wall Street that Fed may increase rates, let's say in December, like 50 points, then stock market started rallying for this hope. And we break this downtrend channel and it is a bullish sign. If NASDAQ and other indices break these levels in the beginning of October, then this is a very bullish sign and the rally can continue some couple of weeks. We may break these levels and continue rallying because of these mega earnings this week. But don't forget, this is still a hope rally. Until getting the confirmation from the Fed on the 2nd of November, we cannot say that this is the dip. But these are very low levels, and I would say that buying from these levels and looking for the Fed meeting, then you can decide whether you sell there or you keep the stocks. As I said, next week is very critical. We have very important earnings. On Tuesday, we have Google, Microsoft, and Visa. On Wednesday, we have Facebook and Ford. And on Thursday, we have Shopify, Twitter, MasterCard, Apple, and Amazon. On the other hand, we will have a GDP data on Thursday. Since April, we are having these negative GDP numbers, and now we are forecasting 2.1% GDP. You can ask why. How can this happen? Because until this time we were comparing high GDPs, that's why we had negatives. So for example, in September we have minus 0.9% because we compared this September with this September. Now we will start comparing the data with these months, and that's why that can affect the stock market psychologically. Going from minus to negative can also have a boost on the stock market. On Friday we will have a PCE price index, which is one of the data that Fed looks for. I think Friday is very key for the stock market. If we get a lower number than 0.5% for core PCE, then rally can continue. But if it is higher, then this will be also under fake rally in my opinion. So in summary, we have these earnings for these 3 days. This can boost the stock market, but watch out for Friday. I want to quickly look at the Amazon stock price. When we look at the stock price, Amazon made the dip around $105 and it didn't go below there. Now we are at $120. You can ask, can it go higher? In my opinion, Amazon stock can go to $130 to $135, but going above this 200 moving day average is not easy, so we can have a correction from there. Like the video. One last point I want to mention about the airline stocks. So in this summer we had very high airline fares. They had really good margins in this ticket, so I had to look at the all airline stocks in general and compare their balance sheet, and I find one stock particularly really good. Here you see the list of some popular airline stocks. We have American Airlines, SkyWest, United Airlines, Southwest and Spirit Airlines, and when we look at their 1-year performance, they are down like 30 to 60%. But don't forget that these airline companies have really high debt due to pandemic lockdowns. They had a really huge debt, and that's why I look at their balance sheet and find the one that has the least debt compared to their cash. And I found that Southwest Airlines, ticker symbol LUV, quite good because when you look at the pricing, it is very close to pandemic lows, which is crazy. If you look at their balance sheet, they have $16 billion cash and short-term investments, and compared to their current liabilities of $11 billion, it is a quite good balance sheet. I think one advantage they have is the low debt before the pandemic. Before the pandemic, they lowered their debt to $2 billion, and after that, of course, they take a huge debt like $11 billion, but since then they are lowering their long-term debt, and they still have a really good cash in their balance sheet. On the other hand, American Airlines, for example, before the pandemic, they already have like $20 billion debt, and with pandemic they increased their debt to $37 billion, and they're not decreasing their long-term debt not that fast. On Thursday, they will have the Q3 earnings. I will also have a look at their earnings. Maybe next week we will talk about that. When we look at the stock price, it is around $33. If it breaks $38, it may go up to $43 in my opinion. So this was the summary of the previous week and the next week. I hope you enjoyed the video. Let me know your expectations about next week in the comments down below. Thank you for watching till the end. See you in the next videos. Please subscribe.